ever felt like you're just drowning in information, especially when you're trying to understand something complex like finance or maybe trading?
Oh, definitely. It's so easy to get lost.
Yeah, lost in all the conflicting advice. It feels like everyone else has some kind of secret and you're just wading through noise. How do you actually cut through it all?
That's the challenge.
Well, today, that's exactly what we're trying to do. We're taking a deep dive into practical rules for trading. We're focusing on the wisdom in Jason Allen Yankowski's book, Davy a Day.
Which translates roughly to 28 rules for business or maybe trading.
Right. And our mission here is really to pull out the key insights, the most important nuggets from this book, to give you a bit of a shortcut, maybe, to understanding a topic that often feels super technical, really complex.
In Kankowski, he's not just writing from theory. He's got over 2 decades of real-world trading experience. Futures, Forex, that's RX. That's the currency markets, equities, stocks.
So he's been in the trenches.
Exactly. He developed these rules by, well, battling the market psychological games himself and seeing so many traders make the same kind of avoidable errors. His goal wasn't rigid dogma, but adaptable rules. Rules for your style, your risk tolerance, even your emotions.
I see. So, okay, the goal isn't just a checklist then. It's about understanding the why behind the rules and how you can make them your own.
Precisely. That's key.
Because that understanding, that's what helps you move from feeling overwhelmed to actually feeling informed, right?
Right? It bridges that gap.
Okay, let's unpack this then. Jankowski lays out these 28 rules, and he divides them into 4 main parts. It sounds pretty structured.
It is, very intentionally so. It's designed to give practical guidance, but guidance that's meant to be flexible. He gets that what works for one person might, well, sink another trader. Ultimately, it comes back to knowing yourself. That's the foundation.
So it's less about finding some magic formula
Yeah, forget secret formulas.
and more about building discipline and really understanding yourself and how the market works.
That's it in a nutshell.
Okay, so part 1, he calls it getting in the game. What's the focus there? It sounds foundational.
It is. The emphasis is squarely on mindset. Thinking in probabilities, having a plan, and knowing your own parameters before you even think about making a trade.
So preparation.
Massive preparation.
Yeah.
And this first section, it immediately pushes back against those simple, often misleading sayings like, buy low, sell high.
Okay.
Rules like, know your game, have a trading plan, think in terms of probabilities, know your time frame. They all point to Yankowski's main idea. Successful trading isn't about fortune telling.
Not prediction, no.
It's about smart participation, using probabilities, looking for situations where the odds are tilted, even slightly, in your favor. And crucially, accepting that even with good odds, some trades just won't work out.
Right. Losses are part of the game.
An inevitable part. So it's about moving past gut feelings into a structured, rational approach. And that structure has to be built on self-awareness.
That makes a lot of sense. So for you listening, what this means is, before you jump in, really understanding your own approach, your strengths, your weaknesses. That's non-negotiable, foundational.
Absolute foundational. You
Yeah.
can't build a solid house on shaky ground.
Okay, so you've got the mindset piece sorted, but what happens when things go wrong, when the market moves against you? That brings us to, well, maybe the most critical skill, cutting losses. Why is this section just so vital?
It's vital because, look, these rules are about protecting your capital. That's job number one.
Yeah.
And they're also about helping you fight that really strong emotional urge to not take a loss.
That resistance, yeah.
Huge resistance. So we're talking rules like define your risk. And that's not just setting a stop. It's knowing the actual dollar amount you could lose and being okay with it. Then always place a protective stop. Your first loss is your best loss. Never add to a loser. And don't overtrade. All about defense.
Okay, I want to zoom in on one of those. Rule #7. Your first loss is your best loss. It sounds incredibly disciplined, almost ruthless. But I can hear someone thinking, but what if it was just a blip, a dip before it rips higher? Am I getting out too soon?
That's the classic dilemma, isn't it? And it cuts right to the psychological core. Jankowski's point with your first loss is your best loss is that it's fundamentally about capital preservation and keeping your head straight.
Keeping emotions in check.
Exactly. Once your predefined risk limit is hit, getting out quickly stops a small problem from becoming a huge one. It reframes the loss. It's not failure. It's a safety measure. It keeps you playing.
A protective mechanism.
Yes. He argues most big account damaging losses don't come from unpredictable market moves. They come from traders breaking their own rules, usually out of fear of admitting they were wrong, or that dangerous hope that things will just turn around.
Hope is not a strategy, they say.
Definitely not in trading. The real power, he says, comes from actually writing your rules down, maybe in a journal, on a checklist, and then enforcing them every single day, no matter how you feel.
That takes serious commitment. Okay, so from the tough discipline of cutting losses, let's flip to the other side, letting profits run, because it's a common trap to snatch profits too early.
Oh, absolutely. So many traders do the exact opposite of what they should. They hold losers way too long and cut winners way too short. It's backwards.
So how does Jankowski suggest optimizing winners?
Well, he offers strategies through rules like keep good records and review them. That's crucial for learning what works. Then add to your winners. Use multiple time frames. Know your profit objective and don't second guess your winners.
Adding to winners. That sounds interesting, but maybe risky too.
It can be, if done carelessly. But the idea is if a trade is working strongly, you might cautiously add to the position, scaling in. It requires recognizing when the momentum, the order flow is strong, maybe using multiple time frames to confirm it. Like if the daily chart looks good, an hourly chart confirms the strength, maybe you add a bit.
Ah, I see. So it's calculated.
Very calculated. It's about thoughtful scaling, not just grabbing a small win because you're scared it'll disappear.
It really is a fascinating balance, isn't it? Mastering the discipline to cut the losers and having the patience to let the winners grow, they feel like two different muscles you need to build.
They really are.
And
equally important.
okay, now this next part sounds intriguing. Jankowski has a whole section called Trader Maxims. And here he seems to challenge some of those common sayings, those aphorisms you hear all the time in trading.
He does, and it's a really insightful section. He takes these maxims, things like don't trade the news or be a contrarian or buy the 50% retracement stuff. It sounds like solid advice.
Yeah, things you hear quoted often.
Exactly. But he argues they can actually hurt your performance if you just apply them blindly without thinking about the context.
Can you give an example?
Sure. Take don't trade the news. Generally, that's probably good advice for many because news events can cause wild swings, slippage where you get filled at a bad price. It can wreck discipline,
Chaos?
total chaos sometimes. But if you have a specific strategy designed for that kind of volatility, maybe it is appropriate for you. Or the 50% retracement rule buying after a 50% drop. Maybe that works well on weekly charts in a bull market, but it could be disastrous on a 5-minute chart in a downtrend.
Ah, okay. Context is everything.
Context is king. His point is, any rule, any maxim, has to make sense for your time frame, your strategy, your personality. Blindly following popular advice is dangerous.
That makes perfect sense. Okay, let's zoom out a bit then. Thinking about the whole book, what are the core takeaways, the big ideas that really stick with you that you want our listener to remember?
Well, I think the biggest, loudest theme is psychology over indicators. Jankowski is adamant that most trading failure isn't because people don't know enough technical analysis. It's emotional.
The mental game.
It's almost entirely the mental game. On understanding your own biases, your fear, your greed, your tendency maybe to chase trades or revenge trade after a loss. That's way more valuable than knowing another chart pattern. Emotional decisions break rules, and broken rules lead to losses. Simple as that.
Okay, psychology first. What else?
Building on that is rules personalized. He doesn't give you the 28 rules. He gives you principles to help you discover your rules, the ones that fit your style, your risk tolerance. And then the key is committing to those rules day in, day out.
Making them your own and sticking to them.
With iron discipline. Then there's the idea we touched on. Balance is crucial. Those two core skills, cutting losses fast and holding winners long enough, everything else kind of flows from getting those two right.
The twin pillars.
You could say that. And finally, it all ties together with self-knowledge and continuous improvement. Rule #28 is literally be a student of yourself.
I like that.
Yeah. It means tracking your trades, honestly analyzing your mistakes, figuring out what actually works for you, and just constantly refining your approach. It never really ends. It's an ongoing journey.
It seems like those underlying ideas are why this book still resonates, doesn't it?
I think so. It's clear, it's actionable. Each rule gets its own short chapter, like 4 to 6 pages. It's not dense theory.
Practical.
Very practical. And it works across markets, stocks, futures, Forex. Because it's fundamentally about psychology and discipline, not about predicting Apple's next earnings report. It's timeless in that way.
So wrapping this up for you, the listener, trying to make sense of complex fields, what's the core message here?
I think the central message from Jankowski is that real success, whether it's trading or, frankly, anything complex, doesn't come from chasing secrets or magic bullets.
Not from external indicators alone.
No. It comes from disciplined self-awareness and applying personalized rules rigorously. That internal work is where the leverage is. And maybe here's a final thought to chew on. The book doesn't really contain secret rules in the way people might hope. The real secret sauce, if you like, is taking these principles and forging them into your own rigid personal discipline. So maybe ask yourself, what personal rules in your own life, maybe totally outside trading, like in your job or health or even hobbies, could benefit from that same level of deep personal commitment, that same contextual adaptation?
That's a great question. Applying that framework, writing down your rules, reviewing them, managing your own emotional responses, adapting to the context. You can see how that could apply to mastering almost anything complex, couldn't you?
Absolutely. It's a powerful template for learning and execution, far beyond just the markets.
A fascinating deep dive. Thanks for unpacking that.
My pleasure.